We're going to start, first of all, with something called money labelling. Now, this is quite an interesting theme we're starting with, because essentially what you're doing here is likening money and investing money to food, which I'll get you to explain first of all. What is money labelling?
Well, money labelling is really looking inside your money, because most people, they buy investments and financial products without really looking inside as to what it does. So the best analogy would be that when you go to a supermarket and you buy a box of cereal or something like that, you look at the side of the box, and on the side of the box there's one of these pie charts that says, you know, how much salt, how much fat, how much calories are in it. And so we are moving the food label idea into money labels, and so we're now creating this format where we can say to people, this is exactly what's inside your money.
So I like that idea, because I like my food and I understand how that works. So this maybe is perfect for someone like me. So I can literally look at this pie chart and see, are you talking about risk value? So that the high risk bit there, if you have that bit in green there, that's not so risky.
It's all about having that balance, and what we're trying to do is use the money label to explain to people exactly what's inside their money, so that they can have a look at the risk, they can have a look at the charges, they can have a look at the tolerance to loss, because really it's not about your attitude to risk anymore, it's about what your tolerance to loss is. So if you have one of these money labels on an investment and you come along to me and say, right, I really like that, you can then have a look at the money label just as a double check to say, well, actually, if I buy that, what risk am I exposing myself to? Has that, you know, and it picks out on what we call stress testing, in that the money label will pick out that when an investment is fully stressed, perhaps like it was a few years ago in 2008, what is the worst that could happen? So you go in with your eyes open, knowing exactly what's inside the box.
So will my pension, will the ISA I choose, will they all have their separate money label? Or will all my complete investment have just one label, or are you separating
That's
them
a very
out?
good point, because you can have a money label for the facility that you're in, like an ISA or a pension, because that could relate specifically to charges and efficiency. You know, can you look at it online, that sort of thing. So how good is it from just a functionality point of view? But then purely from the investment point of view, you have to look at each of the individual funds that have been chosen to see if they fully match your tolerance to loss, and the money label allows us to do that. There are some very famous funds out there that are known as being, you know, top of the pops, top quartile, really good funds that you can go in, run by star fund managers. The problem is that those might be top quartile, i.e. in the top 25% within their peer group, but when you look at what happened to that fund in 2008, even the very best funds managed by the very best fund managers fell 20 or 30%. So it's not so much anymore going into the best funds, it's how you blend them together.
So just to summarise then, money labelling essentially is likening investing your money and what you're doing with your money to the food labelling, and essentially it's all about getting that good balanced diet, as simple as that.
It is, you know, that's what we do. We are blending your money to make sure that we protect your downside.